So, have you ever thought about the sheer chaos that happens when a company's procurement and finance departments are speaking, well, entirely different languages? It's honestly like a married couple sharing a credit card, but they literally never look at the same bank statement. Picture this for a second. Your procurement team is out there furiously buying materials, receiving goods, and managing vendors. Meanwhile, the finance team, they're completely in the dark until a massive pile of invoices suddenly lands on their desk. We're talking about some serious pain points here: disjointed workflows, manual data entry errors, and those absolutely terrifying audit risks because the physical stock values just aren't matching the financial books. It's a massive bottleneck for modern enterprises. But the good news is there's an ultimate solution to this disconnect, and that is exactly what we're going to unpack today. Welcome to today's Explainer. I am super excited to guide you through this because we are looking at the absolute backbone of efficient enterprise management, SAP FICO integration. We're going to explore how bridging materials management, the side, and financial accounting and controlling, the FICO side, drives seamless procurement and financial transformation. And look, this isn't just about installing some software. It's really about making sure that every single physical material movement translates perfectly and instantly into accurate digital financial postings. Okay, here's our quick roadmap for today's Explainer. First, we'll cover the value of integration. Second, the procurement to payment lifecycle. Third, the technical integration backbone. And finally, empowering your digital transformation. All right, let's jump right into section 1, the value of integration. Let's break down the core benefits into 4 vital pillars. First up, we've got automatic accounting entries. Without integration, someone literally has to manually update ledgers, right? But with it, every goods receipt, every invoice, and every vendor payment just automatically updates those financial ledgers in the background. It's a total game changer. Second is accurate inventory valuation. Your physical stock values are perfectly synced with your financial books, which drastically cuts down on those nightmare end-of-month discrepancies. Third, real-time reporting. Managers aren't waiting weeks to see the numbers anymore. They get instant visibility into procurement costs and vendor liabilities. And finally, audit compliance. By relying on these automated postings, you completely eliminate the manual errors that drive auditors crazy. It just massively strengthens your overall governance. Moving right along to section 2, the procurement to payment lifecycle. So let's walk through the 4 physical action steps in the materials management journey. It all kicks off with a purchase order, where we actually decide what we're going to buy. Then comes the goods receipt. That's when those items physically arrive at the warehouse. Next up is invoice verification, where we receive and double-check the bill from the vendor. And the whole shebang wraps up with vendor payment, where the cash actually leaves the business. It's a really clean, logical flow on the procurement side of things. Okay, let's dive into this because this is where the magic really happens. We're looking at how a physical activity creates this invisible, automatic financial reaction in FI/CO. Think about the goods receipt for a second. The activity is the physical posting, literal boxes arriving on a loading dock. But the FI/CO impact, it is instant. You get a debit to inventory and a credit to the GR/IR account, and that hits specific accounts like BSX and WXR. Then, when we move to invoice verification, getting that vendor invoice triggers a debit to the GR/IR and a credit to the vendor, which brings in your vendor recon and tax accounts. Finally, the vendor payment process hits the vendor recon and bank accounts, debiting the vendor and crediting the bank. It's just real-time cause and effect. I actually want to pause here to explicitly contrast those first 2 steps because, honestly, this trips up a lot of people. Notice that the very first step, the purchase order creation, has absolutely no FI posting, none. It's purely an activity that just prepares the vendor and material data. No financial ledgers are touched at all. But the very second we hit the goods receipt, boom, the financial engine roars to life. That physical receipt is the exact trigger for the financial posting, automatically updating your inventory and your GR/SIR accounts. Let's look under the hood in section 3, the technical integration backbone. The absolute secret sauce here starts with something called the OBYC configuration. You can think of OBYC as the ultimate translator between procurement and finance. It's the technical setting that automates the postings for everything we just talked about: inventory, GRIR, freight charges, and even price differences. Whenever a material moves, OBYC acts like a traffic cop, directing the financial data exactly where it needs to go. But OBYC doesn't fly solo. It works hand in hand with the valuation class. The valuation class is incredibly specific. It determines exactly which general ledger or GL account gets hit during those automated postings.
So say you're buying raw materials instead of office supplies. The valuation class ensures that the financial hit lands in the exact right ledger account completely automatically. No human categorization required.
And then you add automated tax procedures into the mix, which ensures strict compliance with country-specific tax codes. So let's do a quick so what check here. When you combine OBYC, valuation classes, and tax procedures, you aren't just doing some neat IT tricks. You are directly enabling those massive business values we talked about earlier. Stuff like perfectly accurate valuation and bulletproof audit compliance, no matter what country you're operating in. Which brings us to our final section, Section 4, Empowering Your Digital Transformation. This is where your implementation partner steps in. And the source material specifically highlights Rasta Infotech's role in driving this kind of digital transformation. And they don't just, flip a switch. They implement true end-to-end MMFIC integration, specifically within SAP S/4HANA. What's really fascinating is how they leverage AI-powered automation for both procurement and finance workflows. They deliver these customized account determination strategies to drastically reduce those costly reconciliation bottlenecks we keep mentioning. And this is huge. They don't forget the actual users. They deploy intuitive dashboards and real-time analytics to enhance human retention, basically making the system an actual joy to use rather than a daily chore. And this brilliantly illustrates the core thesis of everything we've covered today. As the text itself states, SAP MM FICO integration is not just a technical necessity. It is a strategic enabler for procurement lifecycle efficiency, financial transparency, and digital transformation. It is so much more than just IT plumbing. With the right expertise, like what Rasta Infotech provides, organizations achieve true seamless automation, total compliance, and ultimately, far greater profitability. Which brings us to a really crucial question I want to leave you with. Is your enterprise truly integrated, or are you just connected? Are your departments just sending manual emails back and forth, or are they functioning as one automated real-time organism? Take a hard look at your own ERP systems and ask yourself if you're ready to finally bridge that gap. Thank you so much for joining me on this explainer. I really hope it sparks some great ideas for your own digital transformation journey.